issue of shares in whose books? In the books of the company. Accounting for issue of shares in the books of the company. Now what is a share? How to do accounting in the books of the company? As our practice goes, normally we start with a small story. Okay. So write down a small story. Or should I just tell you the story on the board and then we'll start writing entries? You'll write? Your wish. Okay, just tell that story. You listen to me carefully. Okay. I'll take you out on the road. When you go out to the road, what is the first thing you can observe? On the main road. Not this road. On the other road. Biggest thing what you can observe. You can see the pillars of the metro rail project. Yes? So we'll frame a small story on that. Write down. Write down, no problem. Write down. Write down. Super Constructions Limited. We'll have some other company, boss. Super Constructions Limited Super Constructions Limited is engaged in infrastructure business for the last 10 years. For the last 10 years. On 1st January 2014, they have ten crores of available cash balance. Full stop. The AP government has invited bids, bids for construction of metro rail project has invited bids for metro rail project in the city of Vijayawada. In the city of Vijayawada. Okay. In the city of what? Vijayawada. Super Constructions submitted a bid. Super Constructions submitted a bid. For constructing the project at a cost of 12,000 crores. At a cost of what? 12,000 crores. They were declared as the lowest bidder. They were declared as the lowest bidder, and contract was granted to them. The contract was granted to them after paying 10 crores as security deposit. After paying 10 crores as security deposit. Listen to me carefully. Do you understand the story? So, Andhra Pradesh state government, the new government, what they want to do is just reduce this fan suites. What they have done is, they want to construct a metro rail project in Vijayawada. So they have invited bids from private companies. Some private company has to come and construct. Because government cannot construct all those things. Because government doesn't have so much of manpower. So they have invited bids in a newspaper. Super Construction, because they are in that business, they have submitted an offer. They have offered to the government that we will construct the project for 12,000 crores. If you give us 12,000 crores, we will construct the project for you. Okay. Some other companies also have submitted, but they have all quoted more. Somebody wants 30,000 crores, somebody wants 40,000 crores, somebody wants 60,000 crores, like that. So ours was the lowest bid, L1, lowest one we call it as. Government has invited you for discussions, and then the contract was granted. As a caution, government has asked you to deposit 10 crores. So company had, I think, 10 crores in their balance sheet, no? You see the problem, first initially. So what they have done, they have deposited that 10 crores with the government as security deposit. Now, how much will they get if they complete the contract? 12,000 crores. But to complete the contract, you require a lot of money. Yes or no? Continue. Government will pay entire 12,000 crores on completion of contract. Government will pay entire 12,000 crores on completion of contract. Okay. Government is saying, if you complete the contract, we'll write you a check, one single check, 12,000 crores, you enjoy. Okay. Normally it doesn't happen like that, but our story, so we have created put in some additional masala. Continue. Continue. नहीं दिए तो right now continue. To complete the project, we have to spend 10,000 crores out of our pockets. The company has to spend 10,000 crores. 10,000 crores out of the pocket. Now try to understand the problem. If I complete the project, I get 12,000 crores. Sorry. The metro rail project. I get 12,000 crores. To complete it, I require 10,000 crores. Do I have this much cash in my balance sheet? The balance sheet says you have only 10 crores. That also we have already deposited with the government as security deposit. So if I have 10,000 crores, I can complete the project and get how much from the government? 12,000 crores. Now I need 10,000 crores. What should I do now? Bank. Okay, write down. Banks are not ready to give any loan. Banks are not ready to give any loan. Banks are already saying, we have given a lot of loans to infrastructure companies. Nobody is returning the money. So you please don't come and ask for a fresh loan. Banks are not ready to give any loan. Now what will you do? Write down, continue. Existing shareholders cannot contribute additional capital. So shareholders of the company right now, they are saying we don't have money to bring fresh capital. We don't have sufficient amount to bring 10,000 crores as capital. Existing shareholders cannot bring that capital. Banks are not ready to give money. Existing shareholders are not ready to give money. So now we want to get the money from new people. See, now my question is, will we require these 10,000 crores at once or in phases? We are not going to construct the entire metro rail project in one day. First 4 months, first 6 months, phase 1, not first. Let us assume it take 1 year to complete the contract. First 2 months or first 3 months, first phase, the next 3 months, second phase, next 3 months, third phase, last 4 months, fourth phase, and then the contract will be completed. Yes? So we also require the money in phases, installments. So we inform this problem to our Chief Financial Officer. He is a chartered accountant. We tell the Chief Financial Officer, sir, we require totally 10,000 crores. We require it in installments. Immediately, 250 crores, not 50, sorry, 2,500 crores. After 3 months, another 2,500 crores. After 6 months, another 2,500 crores. And 9 months from today, I require another 2,500 crores. Today I want 2,500 crores. 3 months from now, 2,500 crores. Again 3 months, from 3 months. So every 3 months I want 2,500 crores. I want it in installments. So the Chief Financial Officer says, we will try to get money from the public. Let us ask the public to invest money in our shares. Let us ask the public to become shareholders of our company. Let us take money from the public. My question is, why will public invest money in this company? See, if you observe, 10,000 crores if they invest in the project, they are going to get back 12,000 crores. So they are going to get a profit of 2,000 crores. How much percentage profit? Just press on the calculator. 2,000 crores divided by 10,000 crores into 100. Just type 2,000 by 10,000. Don't try now 2,000 0 0 0 0 0 0. Just type 2,000 divided by 10,000. 20% margin. Within 1 year, you are getting a profit of how much percentage? 20%. If you invest money in a bank, how much interest will bank give you? The bank will give you not more than 8%, 9%, 10%. That also a lot of pain in their eyes, deduct tax out of it, and then they'll pay you the remaining amount. Yes? So bank is going to offer maximum 8-9%. This company is going to offer me 20%. Not only that, once this project is over, they will take up one more such project. Because once they get their qualification, once they get that experience of conducting a metro rail project, with that experience they can take up 2 more, 3 more metro rail projects. And they can earn some more profits for the company. Yes? So with that intention, the company has decided to raise capital from the public. How will you raise capital? Can any one individual in the public invest so much amount? Please tell me. Can Shah Rukh Khan invest the entire 10,000 crores? Can Chiranjeevi invest the entire 10,000 crores? No, it's not possible. So what? Dhoni can't even invest 1/10 of that. Okay? So it is not possible, it is not within the range of any single individual. So they decide that we will divide these 10,000 crores into parts of 10 rupees each. We will divide 10,000 crores into parts of how much each? 10 rupees each. Please tell me how many parts you will have? 10,000 crores, parts of 10 rupees each. You will have 1,000 crores such parts. Okay? You will have how many such parts? 1,000 crores such parts. Now what I will do is, to eliminate confusion, we will discuss the figures as 12,000, 10,000. In your mind, whenever I say 1,000, you should say 1,000 crores. When I say 12,000, you should imagine 12,000 crores. When I say 10,000, you should imagine 10,000 crores. But when we are discussing, we'll only say To complete the project we require 10,000. And when we complete the project we are going to get 12,000. Out of this 10,000 how much do we require now? 2,500. After 3 months we require 2,500. After 6 months we require 2,500. After 9 months we require 2,500. So our discussion will be based only on numbers, not crores now. Is it clear? So please tell me, I want a total capital of 10,000. What 10,000 am I talking about? 10,000 crores. Forget that crore now. 10,000 rupees capital I want. Okay. I want to divide it into parts of 10 rupees each. How many such parts will be there? 1,000 parts. Each part is called as share in capital. What is it called as? Share in capital. Please write down. The capital will be divided into parts of 10 rupees each. There will be 1,000 such parts. Each part is called as share. Each part is called as share. Each part is called as a share. Share in what? Share in capital, share in profits. Okay, write down. Share means share in capital, share in profits. So what the CFO has decided? He is saying we will divide 10,000 into parts of 10 rupees each. How many such parts will be there? 1,000 such parts. 1,000 such parts. Each part is called as share. Share in what? Share in capital, share in profits. Okay, continue. The smallest part of capital is 10 rupees. The smallest part of capital is 10 rupees. It is called as face value of the share. It is called as what? Face value of the share. So somebody will ask you, what is my face value of the share? What will you say? The smallest part in the capital is called as face value. Smallest means it cannot be further divided. Smallest means it is undivisible portion. It cannot divide. It cannot be made into smaller parts. This is the smallest part of your capital. That is called as face value of the share. Okay. Continue. This is the amount which will be credited to the capital account per share. This is the amount that will be credited to the capital account per share. Per share. Full stop. Okay. Now I have understood. The scheme is 10,000 crores we want, or 10,000 rupees we want. We'll divide into 10 rupee parts. We said this is the amount I want, 10,000. Divided by 10 rupees each part. How many such parts will you have? 1,000 shares. Now, what will you do is, the company will give an advertisement in a newspaper. That is called as a prospectus. What is called as? Prospectus. In the advertisement, company will invite the public to invest money in the company. The company is going to invite the public to become shareholders of the company. The company is inviting the public to contribute capital to the company. But the advertisement will provide that if anybody wants to invest capital in the company, the minimum capital he has to invest is 10 rupees. If somebody wants to invest capital, minimum how much he has to invest? 10 rupees. That means he has to contribute for minimum one smallest part of capital. Suppose I have 100 rupees. How many shares can I invest for? I have 100 rupees, no, I'll tell the company, you are saying smallest part 10 rupees, no. I have money 100 rupees, so I want to invest for 10 shares in capital. Company will say, okay, give us 100 rupees. We'll call you as a shareholder holding 10 shares in the capital and 10 shares in profits. Now somebody says, I am a very rich man, I have 20,000 rupees in my pocket. 20,000 rupees, not crores, 20,000 rupees in my pocket. Then how many shares can he buy in the company? 20,000 divided by 10. He can contribute capital for 2,000 shares. Is it clear? Continue. The company gives an advertisement in the newspaper. Inviting the public to contribute capital. Minimum capital which public can contribute is 10 rupees. The minimum capital which the public can contribute is 10 rupees. Continue. The company makes available application forms. The company makes available application forms all over the country. The company makes application forms available all over the country. The company makes application forms available all over the country. In ATM counters, banks, post offices, right on. All over the country in ATM counters, banks, post offices, etc. So if anybody is interested to contribute capital, what he has to do? He has to pick up one application form. Depending upon his pocket size, he has to fill up how many shares he wants to contribute capital for. It's not buying. We normally in general language we say buying a share, but it's actually not buying. We have to contribute how many shares I want to contribute capital for. That I have to fill up in the application form, and along with money I have to send the application form to the company. Is it clear? Right on. Interested people have to fill up the application form. Interested people have to fill up the application form and send it along with application money to the company. Interested people have to fill up the form and send it along with application money to the company. So if I am interested to purchase the shares in the company or contribute capital in the company, I have to take one application form, write my name, address, date of birth, address, everything I have to fill up, how many shares I want to contribute for, fill up that number, then take out a check, attach it to the application form and send the application form and the check to the company. Is it clear? So how much amount I have to send? Application money. Now, how will the company collect money in our example now? See, they don't want the money immediately. Right on, continue. The money has to be paid in installments. The money has to be paid in installments along with applications. Along with applications, 2.50 per share. Along with application, rupees 2.5 per share at the time of allotment. 2.5 rupees per share. At the time of allotment, 2.50 rupees per share. First call. First call, 2.50 per share. Final call. Application 2.50 per share. Allotment 2.50 per share. First call 2.50 per share. Final call 2.50 per share. So if anybody is interested to contribute capital, how much he has to pay? Along with application, per share I have to send 2.5. At the time of allotment I have to send another installment of 2.5. Then first call I have to send 2.5. Final call I have to send 2.5 rupees. Is it clear? Are you able to understand? Okay. Now, suppose company don't want in 4 installments. They want immediately 2,500, 2,500. They want 500 immediately. Remaining they want it in installments. 5,000 they want immediately. They want the remaining amount in installments. Okay. So how is the money going to be sent? Please tell me. 2.5 at the time of application, 2.5 at the time of allotment, 2.5 at the time of first call, and 2.5 at the time of final call. Is it clear? Continue. Public has applied for exactly 1,000 shares. The public has applied for exactly 1,000 shares. The public has applied for exactly 1,000 shares, and full allotment was done by the company. Now listen to me, what is this allotment? Now, we have given an advertisement in the newspaper, we have circulated application forms all over the country. Many people have seen those application forms. They want to buy, they want to contribute capital in the company. They fill up their names, addresses, date of birth, etc. They attach checks along with the application form and they send application forms to the company. The company has received exactly application for how many shares? 1,000 shares. I told you, all numbers are in crores. So when I am saying 1,000, that means I have received 1,000 crore applications. So let us remove that crores for the sake of removing complexity. So we wanted to issue exactly 1,000 shares. Public is also interested to buy exactly 1,000 shares. Our story, no? Actually, applications may or may not be exactly equal to how many shares we want to issue. They can be less, they can be more. So we are assuming we wanted to issue 1,000 shares. The public has also applied for exactly how many shares? 1,000 shares. Now company will receive application forms. Actually in our story, how many applications are there? 1,000 or 1,000 crores? 1,000 crores. So company will now receive checks in bags, gunny bags. Not one gunny bag, hundreds of gunny bags. So now what the company will do? Company will prepare a list of all the people who have sent application money. They will put first of all the checks in the bank account. Because we want the money, no boss, urgently to start our project. So immediately we put the money in the bank account, the checks in the bank account. Then the board of directors of the company will meet. Who are board of directors? It is the we can say the brain of the company. It's a group of people who are going to take control of the company. They control the company normally. Board of directors. Okay. So now board of directors will meet. They will take the entire list of shareholders. And if they find somebody like Dawood Ibrahim or Chota Shakil or any other terrorist or any other bad person, Osama, so they will remove their names. They will say, boss, don't allot even a single share to these people. So we will not allot any shares to them. Remaining people they will allot. So then they will pass a resolution in the board meeting. That is a decision. The board will take a decision saying that from today onwards, all these 1,000 people will become shareholders in our company. From today, they all become owners in our company. That is called as allotment of shares. What is called as So you have only applied, you have asked the company, will you take me as the owner of the company? Now the board sits, the board conducts a meeting and then take a decision. Yes, they have applied to become shareholders, let us take them as shareholders in the company. Let us allot them shares in capital, let us allot them shares in profits. They take a decision that is called as a resolution. We call it as what? Allotment of shares in the company. Is it clear? Are you able to understand? So now, listen to me carefully. We wanted 10,000 crores for our project or simply 10,000 for our project. We will receive 2,500 from obligation, no? 1,000 into 2.5. 2,500 will receive obligation. We want 5,000 crores immediately. Remaining we can take it in installments. So, as soon as you receive obligation money, the board will conduct a board meeting. They will sit in a board meeting, pass the board resolution for allotment of shares, and then they will ask the shareholders now to send the second installment, another 2.5 rupees. Now how much will you receive now? 1000 into 2.5 will receive 2500. Application we receive 2500. Allotment we have received 2500. With this 5000 crores we can start our business, we can start our project. After some time, when we require the third installment, we will write a letter to the shareholder. Shareholder, you have agreed to pay 10 rupees per share. You have till now paid only 5 rupees. Send me another 2.5. So shareholder will send another 2.5. That money also company will use. After some time, a company requires money again. They will again write a letter. Shareholder, you have promised to pay 10 rupees. Till now you have paid 7.5. So please send me another 2.5. Is it clear? Shareholder will send that amount also. How to account for all these things in the books of accounts of the company? That is what we'll discuss right now. Write down. Accounting in the books of the company. Accounting in the books of the company. Please tell me what is the value per share? 10 rupees. It is receivable in installments. Application 2 rupees 50 paisa. Allotment 2 rupees 50 paisa. First call 2 rupees 50 paisa. Final call 2 rupees 50 paisa. This is how we are going to receive the money. Write down. Entry number 1. When application money is received. Now we are accountants of what organization? Company. So we have got promotion now. We became accountants of a sole proprietor. Then we got a promotion. We became a accountant of a partnership firm. Now we have been given further promotion. And now we have become accountants of a company. Okay. Write down. When application money is received. What is entry you write? When application money is received. Company is receiving checks in gunny bags. We are putting those gunny bags in our bank account. Money is going into our bank account. Bank, personal account, receiver, debit. Write down. Bank account, debtor. Bank account, debtor. How much? 1000 into 2.5. 2500. Don't feel bad. All numbers are in crores. 2,500. Who gave this money to the company? Who gave money to the company? They have not become shareholders yet. Only on the day when the board passes a resolution allotting the shares, till that date they are not shareholders of the company. They are merely outsiders. They are outsiders. They are creditors. They are giver of the loan to the company. They have only applied. They have only applied. Company has not sold yet. On the day when the company allots the share, that day company has sold the shares to the shareholders. Is it clear? So right now it's only an application. So somebody, outsiders, public has given the money to the company. Public gave money. Public, personal account, giver, credit. So their account has to be now credited. So write to share application account. What is the share application account? Can you write? Mr. Ramesh, Mr. Naresh, Mr. Kiran, Mr. Surya, Mr. Venkat, ICICI Bank, SBI Bank, everyone will apply, no? If you write the names of all those people, no, you will die. You cannot write names of each and every individual. We write their names in a register called as the share application register. We write the name of the register in the entry. Okay. So what entry we are going to pass? Bank account debtor to share application money account. Is it clear? This is the entry we pass when we receive application money. After this, what will the company do? I told you, the board of directors will sit with the list of applicants. If you find some terrorists, remove them from the list. Remaining people will say, write a letter to them. We are very happy to inform you that you have been allotted the shares. From today, you are owners of the company. You will be called as shareholders of the company. Yes? So now allotment will happen. Write down when shares are allotted and when shares are allotted and when shares are allotted and application money transferred to capital. Listen to me very carefully. Company has allotted the shares. The board of directors have taken a decision. From today, these applicants are owners of the company. They have taken a decision. Now, once they take this decision, our error will come out. Now, please tell me, you have received money from applicants, no? Which account did you credit? Share application account. We have shown them as outsiders. Giver of loan we are showing there. But what is their position now after allotment? They are now no more outsiders. They are owners of the company. Now my question is, owners when they give capital, which account should be credited? Capital account. But which account you have credited? Share application account. Now you have to shift the amount from application account to capital account. The shareholder will say, why did you write my amount in share application account? I am shareholder, I am owner, so I have given capital. So remove the amount from that account and convert it into capital. So we'll say, okay sir, and we'll transfer the amount from application account to share capital account. Write down the entry. What is the entry pass? When shares are allotted and application money transferred to capital. Now, the logic you have understood? On the day when that resolution is passed, applicants become shareholders. They become owners. Now, a question arises, whatever amount owner has given should be credited to capital account, no? But already it has been credited to which account? Share application account. Wrongly credited to application account. Correctly it should have been credited to capital. Wrong credit given to this account. How will you remove it? Debit. Can you do this and write capital here? No, striking of business. So what we do? We remove the wrong credit by giving a debit. Share application account debtor 2,500 to share capital 2,500. Now please remember one very, very important point in your mind. Throughout this chapter, the smallest indivisible portion of capital is called as face value. In this problem, face value of the share was 10 rupees. I told you, per share you can credit only how much to the capital account of the owner? 10 rupees. You cannot credit more, you cannot credit less. If a shareholder is holding one share, for one share, how much can you credit to his capital account? Not more than face value, not less than face value. So face value is the amount which will be credited to the capital account of shareholder per share. So if I am holding 10 shares, how much amount can be credited to my capital account? 10 into 10. 100. That's it. Not more, not less. Is it clear? Now that 10 rupees is collected in installments, no? 2.5, 2.5, 2.5. So all those 2.5 rupees installments can be definitely be credited to the capital account because they are all part of face value. Because they are all part of what? Face value. Is it clear? Continue. Now listen to me. I'll just change story a little bit. We wanted 10,000 crores for the project now. Let us assume we wanted 5,000 crores immediately. Because we have to give advances, acquire machinery, start our business. Suppose we require 5,000 crores immediately. How much we have received now? Only 2,500. We want another 2,500. Right now. When allotment money is made due, when allotment money is made due, what is this? The board of directors, they pass a resolution for allotment of shares, no? Now in the same meeting they will write a letter to the shareholders. Shareholder, congratulations, you have been allotted shares, but please immediately send us another 2.5 rupees per share. You have promised to pay 10, you have paid only 2 rupees 50 paisa per share. Send another 2.5 per share. They will say congratulations, you have been allotted the share, and then they will say please send us another 2 rupees 50 paisa per share. They will send letters to all the shareholders. Now what is the job of the shareholder now? He knows he has promised to pay how much? 10. He has paid only 2.5. He will immediately write a check for 2.5 rupees and send it to the company. Okay. So now the board is writing a letter to the shareholders. Now as soon as the board writes a letter to the shareholder, the board will call the accountant. Accountant, our shareholders, very nice people. They are very good people. You have written letters to them. Capital is definitely going to come. You need not worry. Immediately increase their capital account balance. Accountant will say, sir, money has not come. How can I increase their capital account balance? No, don't worry. They are very nice people. They will give the money. Till the time they give the money, show them as debtors in our books of accounts. I'm again explaining. Listen to me carefully. As soon as the allotment letter is written, they will call the accountant. We have just now written a letter to the shareholders to send another 2 rupees 50 paisa. They are very nice people. They definitely send money. You immediately increase their capital account by how much? 1000 into 2.5, 2000. Accountant will say, sir, without receiving money, how can I increase? They say, they are very nice people. Don't worry. Till the time they pay money, show them as debtors in our books of accounts. Okay. Now, we will not show them as ordinary debtors. They are debtors for what money? Allotment money. So, the accountant will show all the shareholders as a debtor, but in a register called as share allotment register. What register?
Share allotment register.
Write down the entry. Share allotment account debtor. Share allotment account debtor. Share allotment account debtor. How much? 1000 into 2.5. Now what is the share allotment account debtor? We are showing the shareholder as a debtor. Because you have written a letter to him. He is responsible to pay money. Company has the right to ask. He has the liability to pay. That is why we are showing him as a debtor. And the amount should be credited to his capital account. To share capital account. So what did we do? As soon as we wrote the letter, we have increased the capital balance. Sir, money has not come. That is why we are showing the shareholders as a debtor. Is it clear? Now, as soon as the letters reach the shareholders, what will they do? They will start doing online transfer or they will start writing checks. The checks will come to the company now. Okay. So now the directors will take all the checks and give the accountant. Accountant, we told you, they are very nice people. Take these checks now. They will say, okay, thank you, sir. They will deposit the money in the bank account. Right on. When allotment money is received, when allotment money is received. What is the entry right when allotment money is received? Now we are receiving checks. Checks will deposit in the bank. So bank account debtor. Bank account debtor 2,500. Who gave this money now? Shareholders who were shown as debtors in this register. Debtors have paid the money to us. So debtor account should be credited. Who gave the money? People who were shown as debtors in this register. To share allotment account. It is like goods sold on credit. What is the entry you write? Debtor account, debtor to sales. Value of goods sold is shown as an income. And till the time money comes, we show the customer as a debtor in our books of account. When the money is received, what is the entry you write? Do you write again cash to sales? No. Cash account, debtor to debtors account we write. We write cash account at what? Debtors account. Same like that. Debtor to sales, cash to debtors. Debtor to capital, bank to debtor. Is it clear? We are not selling goods, we are allotting capital. We are asking capital from the shareholder. Is it clear? Do you understand? Now, wait for a second here. Here, money was received first, it was transferred to capital later. Here, capital was increased first, money was received later. So there is a small difference between application money treatment and allotment money treatment. Here, money comes in advance, it is prepaid. Here it is postpaid. We ask, then they pay. Here, they pay, then we allot. So there is a difference. Is it clear? Continue. Now, how much we have now? 5,000 crores. So for next 6 months, you can happily do your business without any trouble. After that, we will again require money. So what do we do? We'll write one more letter to the shareholder. Shareholder, time has come, pay another 2.5 rupees. Write on. When first call is made due. When first call is made due. When first call is made due, underline. What is this? Again, directors will write a letter to the shareholders asking them to send how much? 2 rupees 50 paisa per share. They'll immediately ask the accountant, please come here. Very nice people. They will write a letter to them. Please increase their capital balance. Accountant says, sir, money has not come. We have written letters. They will immediately send the money. Till the time they send the money, you show them as debtors in your books. Pass the entry. Share first call account debtor now. We are going to show the shareholders as a debtor in which register now? Share first call register. Share first call account debtor to share capital. When first call is due, share first call account debtor to share capital. 1000 into 2.5, 2500, 2500. Now, so even without receiving the money, we have increased their capital balance. So till the time they pay money, we are going to show them as a debtor. Okay. Now, as soon as the letters reach the shareholders, what the shareholders will do? They will start sending checks to the company. Company is receiving checks from the shareholders now. What is the entry now, right? Right on. When first call money is received, when first call money is received, what is the entry right? When first call money is received, bank account debtor to share first call account. When first call is received, entry will be bank account debtor to share first call account. How much amount? 2,500. Is it clear? Not over yet. After another 3 months, we require the last installment. So what the directors do? Again write a letter to the shareholders. Shareholders, time has come. Pay the last and final installment of how much? 2.5 rupees. Write down. When final call is made due. When final call is made due. When final call is made due. What is the entry you write for when final call is made due? Again, the directors will call the accountant. Very nice people, shareholders. Immediately increase their capital balance. Accountant will ask, why should I increase? They will say, we have written a letter. They will send the money immediately. So even without receiving the money, we are going to increase their capital balance. And till the time they pay money, they become debtors to the company. Hence we pass the entry, share final call account debtor to share capital account. Share final call account debtor to share capital account. Share final call account debtor to share capital account. How much amount? 2,500. Share final call account debtor to share capital account. 2,500 rupees is the entry. Now, when amount is received, write down. When final call is received, what is it to write? Bank account debtor to share final call account. Now listen to me carefully, everyone. Please listen to me carefully. Observe entry number 1, entry number 2 in your notebook. Application money was received, then transferred to capital. See those two entries. Can you see something common in those two entries? Share, application account, debit and close those two common things with your finger. And see what is the entry of passed? Bank account debtor to share capital. Go to entry 3 and entry 4. Allotment money due, allotment money received. What can you see common? Share allotment account debtor, share allotment account credit. Close those two sentences with your finger. What entry you can see? Bank account debtor to share capital account. First call due, first call received. See those two entries. First call account debit, first call account credit. Close it with your finger. How much do you get? What do you get? Bank account debtor to share capital. Last two entries. Final call account debtor to share capital. Bank to final call. Use your fingers, close those two sentences and see the net entry. Bank account debtor to share capital. That means we have learned only one entry. What is the net entry for all entries? Bank account debtor to share capital account. Application account is an intermediary account, opens, close. Allotment account opens and then closes. First call account opens and then closes. Final call account opens and then closes. So ultimately balance will be left on only two accounts. Bank account of the company and capital account in the books of the company. Is it clear? Did you understand? This is how we do accounting for issue of shares in the books of the company, not accounting in the books of the company. Only accounting for issue of shares. Continue. Next problem. Next problem. Write down.